Good morning. We are once again have the pleasure and the honor to interview Sebastian Rivera of Intercoastal Mortgage, Senior Vice President, and we're going to do a little different deep dive. As you know, I go on the internet and I scour and talk about and try to find out what most buyers and sellers are asking through Google, AI, and all these other internet media. And based on that, we sort of tailor the deep dive that we want to do every time we do this interview. So, without further ado, good morning, Sebastian.
Hey, Adrian, good morning.
So, I'm going to start with what happened yesterday. And before I dive into my question, I just wanted to get your acquiescence as to whether I'm wrong or right when I say that the Federal Reserve has two mandates, basically inflation and labor. And when those two factors are affected, you will see rates drop or rates go up. In
Right.
addition to that, it is my thinking, and I think I am right on that, and you can attest to that too, that when there's a rate drop, definitely it affects the servicing of our national debt, and it also affects the interbanking rate, but it doesn't necessarily translate into a mortgage rate reduction. So that's going to lead me into my first question, which is, will the Fed's yesterday move actually lower mortgage rates, and what's happening today?
Um, Loaded question, but yes. So long term, we are going to see a rate drop. What the primary factor of rates is inflation. Inflation is what we're always looking at. High inflation means high rates, low inflation means low rates. Just because the Fed drops the Fed fund rates, it doesn't necessarily mean that mortgage rates are going to drop. What the markets are looking for is the move inflationary or non-inflationary? Sometimes when they drop rates, it can be seen as inflationary. So, like what we saw yesterday, when Jerome Powell came out and started to talk, those first 10 minutes were absolutely stellar. The mortgage bond market was up. We were up 22 basis points. Everything was going great until the Q&A came in. Once the Q&A started and the non-direct way he answered questions. Some of the questions were diverted, if you will, and we didn't have certainty of the next steps of what's going to happen. We started to see mortgage rates go up. By the end of the day, we were down 22 basis points, and today we're down another 20 basis points. So in a couple of hours, we've lost about 42 basis points. Rates got worse. We didn't have certainty in Jerome Powell's guidance. He used the term a risk management cut. So there's really no clear signal of what's going to happen next. So in a nutshell, short-term rates went up just because the markets are uncertain. Long-term, we are expecting mortgage rates to come down as inflation comes down. Inflation still remains above the 2% Fed's target. So we'll see what's going to happen.
Yeah, I think that the comment that you made was new. It was even coined yesterday on the news as, he sort of like danced around the subject a little bit and coined that phrase that you just mentioned, which was like nobody's ever used this before. At least that's what I saw in the media. So I think that for our viewers, knowledge, I'm going to wait until our next interview to ask the question, where do you think rates are going to be towards the end of the year? So we give it a chance for the dust to settle a little bit. Okay?
They'll, yeah. I'm still confident they will be lower. It's just the dot plot projections as well weren't, there was a lot of uncertainty from all the members of where rates are going to be in the future. And that massive uncertainty is just, this is what caused the market to go the wrong way,
Right.
short term
So
at least.
based on that, should buyers lock now or float?
It depends. If you're closing in the next 30 days, bird in hand is always the safest bet. If you're willing to hedge a little bit of risk, floating it out, but it depends. There's not one answer for every buyer. If I have a buyer that's tremendously well qualified, makes $30,000 a month, $100 more or less per month isn't really going to phase them. But if I have somebody that's at the very tip of their qualification, the debt income ratios are tight, it's not even a question. Lock in now, and at a future date, we can look about refinancing. Rates will continue to come down based on all the current economic data. We have softening employment, and hopefully inflation will continue to come down at a point where mortgage rates come down enough to refinance. But to lock or not to lock, I mean, that's the question, isn't it?
Okay, okay. So it's based, I also feel that it depends on, within our greater metropolitan area, it depends on what value of property we're talking about. If you're in the 400,000, it's not the same thing as being in the 1.7, as you mentioned.
Correct. It,
Okay.
it's it is, and if some people are like, well, I'm closing in 60 days. What should I really do? Should I lock or not lock? Well, it depends on your risk appetite. If you're adverse to risk, it's going to be a very different answer that if you're a big risk taker or if you're tremendously well qualified. I'm working with a physician right now who makes close to six figures a month, and we went over the numbers, and he's like, honestly, Sebastian, I don't really care if I get above or below six. I just want to know I got something below 6%. The payment doesn't phase me. I couldn't care less. I just want to know I got something below six. So let's float it out.
Okay. Good example. Which takes me to my next question. And this is today I want to ask your opinion or your perspective on some of the real estate questions. So my next question for you would be, from your perspective, are home prices softening or holding?
Depends on which area. If you're looking into certain areas like Arlington, Virginia, holy smokes, that place is still on fire. McLean, Virginia, as well. You have Bethesda. Wow, I've seen some prices that still surprise me. And then you have other areas like Washington, D.C. I just I'm working on a refinance for one of my clients. He purchased the property December 2022, condo in D.C. He paid 740,000 for it. We just got the appraisal back, 675. Specifically in DC condo market, I am seeing a softening of prices. As you get further out from the city, I'm also seeing a softening of prices. Those massive price tags that some areas were commanding have shifted downwards, and I'm starting to see more realistic offers when a property comes through. Properties listed in Vienna, Virginia for $1 million. Maybe they'll offer a little bit above list price, but no longer 1.2, 1.3 just to get it. So I am seeing a shift for sure.
Yeah, I think you hit the nail on the head on one of your comments, which is the condo market. I sort of tend to look at it separately from your single family homes. Condo markets are, for starters, they sit on the market way longer than single family homes, and you haven't seen the price appreciation over the last couple of years that you see in single family homes in certain areas. So yes, I just did a deal in Bethesda, condo, Bethesda, that took 6 months to put together. It was a beautiful unit. It was well built. It's recent construction, so it had all the bells and whistles. But yet that condo market is still stagnant. It's still, and you see that in West End in DC. You see it in Arlington. So I treat that definitely differently than your single family homes. Single family homes, as you mentioned, in certain areas are still hot pockets.
Mhm.
So, do you think that buyers, based on this comment, have leverage, better leverage today than they
They
used to?
do. Absolutely. I've seen a myriad of contracts. If I have to give you a number, 50 to 60% of all the contracts I'm getting right now have some sort of seller credit on them. So 1%, 2%, a couple of properties further out in Fredericksburg, Virginia, I'm seeing 3% seller credit again. So I've definitely seen sellers step up to move their properties. They realize that, oh, I can't just put it on the market and it sells. Sellers are actually doing the work right now. They're fixing it up before putting it on the market. They're changing carpets, they're painting. I'm seeing sellers prep their homes because otherwise it's just going to be sitting on the market for longer.
I also see the trend of reality check, which is this is not the 2020s where you could, my property, I would like to put my property on the market for 1.3 when it's valued at 1.1. Um, and I tell some of my clients because they go online, they're going like all these price drops, what's happening in the market. I'm going like most of the sellers are just getting a reality check, which means you got to price your property at fair market value if you want to move it. So if you go on the market at 1.2, like I tell most of my clients, this is your honeymoon period, 21 days, and we don't get any traffic and we don't have any movement, it means that your property is overpriced and it hurts you. So it's better yet to go in the market at fair market value. And I also see some of those advantages that sellers are offering as a consequence of keeping the properties overpriced in many instances.
Oh, and those properties end up sitting for longer. Yeah, my wife and I, we're in the market for a home, and we looked at an area that we really liked. There is a home on a street that we would love to live on it, but it was way overpriced. They wanted 2.3 million for it. We knew it wasn't worth that. So the seller then called me back, "Hey, I'm going to give it for 2.2 now. You better get it." I still told them it's overpriced. 2.1, 2 million. Now it's on the market for 1.95 and it's still overpriced, and he's gone through three different agents.
Yeah,
And he calls me
that's
back once a month. I tell him, your house is overpriced. And now the original offer we would have done, I'm not even willing to do that.
exactly. That's you see that even though I see a trend in new construction where they're finally getting a reality check. I truly believe that new builds are coming on the market at a fair market value, whereas new construction in the past, I felt it was overpriced, and you don't see that trend anymore. And I also see something in new construction that I particularly like is that they have identified a niche of upsizing. And when they upsizing, which is the maybe the gentleman or lady or couple or whatever that came into the market through a rental and then want to buy, they're finding new construction at much more reasonable prices because
Yeah,
they're reasonable in the square footage. They have
absolutely.
identified that the younger generation today doesn't have a stereo, doesn't have a number of contractions that people my age used to have, and therefore there's no need for that kind of space. So I like that they've tweaked their design to sort of satisfy that market. So that I found very interesting. So do you think that have you seen buyers really jump back into the market?
Yes. Holy smokes. This week, particularly yesterday we had probably 15 to 16 people reach out saying, "Hey, we want to redo the application that we did in 2024. We want to get back into the market." So it's been the drop in rates, the news, everybody thinks, "Oh, rates went down another 0.25%." And I saw on the Weather Channel that they're 4% now. So it's a lot of conversations in education, just saying, "Hey, rates aren't 4%, but the trend is coming down. This is where we are right now. This is what we can offer." And it's a lot of education just to give potential buyers a reality check of what they see online of 4% versus what the reality is.
Right, right, but at least they're jumping back into the market. I think that I think we've sort of settled into this is the new normal.
Yeah.
And so if this is the new normal, okay, I'm willing to go in and buy. So I just wanted your take on that. So therefore, it takes me to the next question, which basically you just covered, is should I wait it out or should I jump in now? Basically, at this stage, it's jump in now. And we're also feeling, I think, the uptake because it's the beginning of the fall market. And contrary to some perception, many a times there are potential sellers from the spring that either didn't finish fixing their property or whatever, and therefore it makes the fall market a lot more attractive in volume for potential buyers. So, if the seller offers a credit, should the buyer take it as a permanent buy down, a 2-1 buy down, or straight closing cost relief? What is your take on that?
I
And do you
mean,
have other options?
99% of the times I'm going to recommend the same thing. "Adrian, I have $10,000 for you. Would you like the $10,000 today? Or would you like me to pay you $833 per month for 1 year and not pay you any interest on it?"
Okay.
I mean,
Okay. So
he
it's up
wants to
to
take
the
the money up front. Exactly. That's exactly what a buy down is. You're prepaying the interest over a year. You're not making any money on it. Why would you want to do that unless you do not have the financial education to know how to budget correctly? In that case, two times I've recommended this one. And it was for first time buyers and parents were involved. And I saw the credit reports and I saw the missed late payments and I saw their budget. I said, look, the buy down will work in this case because it's going to help you while you continue to earn more money in your job. And I see a clear projection, and I already know how much you're going to make in a year based on this contract. In that case, yes, it makes perfect sense to do a buy down. A buy down for me is just a marketing gimmick. It's like, oh, hey, we can give you 2%. It looks nice, it feels nice, but at the end of the day, it's the same thing. You just prepaid all the interest. I much rather use the money towards closing costs. Most of our buyers, especially in this area, are savvy when it comes to their own money and money management, it makes much more sense to take the money up front.
Right,
Unless you have those particular cases where somebody really needs the help, or a commission buyer, or somebody about to get a big bonus at the end of the year and their cash flow is strapped, sure, it makes perfect sense. But otherwise, take the
right,
bird in hand.
right. Any other options do you have available?
Um, I mean, you can use buy down, you can use closing costs, you can prepay HOA fees, you can prepay up to a year of condo fees the
Okay,
same. There's ways to use it up, but if my money isn't earning money, I'm losing money. And I already know if I do the 2-1 buy down, I'm losing money on inflation. So I'd much rather have the money today and invest it.
absolutely. I totally agree with you. Okay, so let's talk appraisals. Have you
Mhm.
seen a trend? Um, and I'd like for us to cover a little bit like per area, because as you say, one thing is Arlington, Bethesda, another thing is Potomac, DC,
Yeah.
etc. So regarding appraisals, have you seen a trend of them coming down?
Yes, actually. The specifically the 1 million to 1.5, whatever I see online and whatever my clients are telling me, hey, I'll tell them, I see online 4 different sites, you're worth about 1.2 million. Well, my neighbor just sold, so mine is worth about 1.3. The appraisal ends up coming a little bit lower, about 1.18. And they're like, well, why did it sell lower? I'm like, well, I'm looking at your neighbor. They had 800 more square feet. They have one more bathroom. They have one more bedroom, and they have a garage parking, for example. New constructions are coming out perfectly fine. Of every new construction I've done this year, not a single one has appraised low. Properties that have been renovated, I just did one in McLean. He was expecting 1.8 in value, came in at 2.1. He was like, wow, this is great.
Right.
Um, but the buyers who bought in 2022 and are expecting another massive wave of appreciation, probably not.
Well, we
And
always
if
know that we always know, and I always tell my clients, if you really want to make some money, you got to hang in there for at least 5 years, you
Yeah,
know.
and this is not the market to buy a house and flip it with nothing repaired in the house for an extra 100,000. I mean,
Right. So I do like the trend that you mentioned, and it's a message for all the sellers out there. Talk to your agents, make sure that you
yeah.
make the necessary investment in fixing the place up, and there are rules as to where you should put your money. Most agents would tell you where to put your money based on the condition of the property. So it appraises. And I also see people doing crazy things, investing in remodeling kitchens, complete remodels, etc. And at the end of the day, you put 50 grand in, you're not going to get 50 grand back. So it's a question of where do you put that money? And my other suggestion, I don't know if you agree with this, is pre-inspect your property. If you
Yes.
want to
So
have
it's
a
huge.
handle, if you want to have a handle on not necessarily having to come to the table to negotiate because you didn't check the leak in the powder room or you didn't do this or that, I always recommend my clients pre-inspect. Let's just say that you have systems that are older, at least and it gives you as a seller and your agent, a strategy of how to negotiate once the inspection on the buyer side takes place.
One
So
of
I
the
think.
primary, yeah, the recommendations that I'll give my buyers is exactly what you just said. They'll say, well, I have $20,000 budget and I need to sell the house. Call your agent, ask your
Mhm.
agent, make sure that 20,000 goes into the exact right places it has to go to maximize the value. Because what I think those 20,000 should go to doesn't necessarily mean what the next buyer is going to think they should go to.
Right, of course, and I say, for example, the tackle the two largest surfaces in your home. What are those? Walls and floors.
Yeah.
If walls and floors are tackled, you make your property move-in ready. Maybe it has a dated bathroom, maybe you change a countertop in the kitchen, but that's it. And it's dated. And the next buyer can come in and say, well, I want a gray, and they can do a gray kitchen if that's what they wanted. But at least you've invested the right funds in the right places to make your property available for somebody to move in, wear it in for a while, and then decide what changes they want to make. And just by doing floors and walls, your property will increase in value. It's amazing with just those two investments, and it's not major in most cases.
Yeah. 100%.
Very well. So I so appreciate any other comment that you have for me on this moving day in the
Um,
sense of what the Fed has done and what the consequences are going to be.
The biggest thing is just continuing to monitor where the markets are. As I'm looking out, we were down 22 basis points. Now we're down 13 basis points. It's not as bad. So the market is starting to recover and digest from some of these comments. I would say don't say, oh, rates are going to be so low now or rates are going to be so high. Just weather the market. Know that whatever we get right now, whether you get a 5.875 or 5.75, you're still probably going to be refinancing this in the next 18 months. So
Okay. Have you seen a lot more first-time home buyers come into the market?
yes, significant amount of first-time buyers that want to come back into the market and Gen Zs. The interesting part of Gen Zs I've noticed is the communication. Wow, just night and day difference. Versus my baby boomers, everything, good afternoon, sir, good afternoon, ma'am, very formal, versus my Gen Zs texting me with emojis. And I'm staring at the emoji. I'm like, what the heck did this person just say? So I'm chat GPTing, chat GPT, can you please tell me what this person means? And it's a different level of communication.
That's not only the level of communication, I think they're savvier. They are savvier. The Gen Zs listen to things, etc. They don't necessarily get it all right because just because you go on AI or the internet doesn't, you have to know what information is the correct one. And first-time home buyers on the other end need to be handheld, which I think is great. And I'm glad to hear that. How about downsizers?
Downsizers, I've seen a few, but not too many. I haven't had a whole lot of downsizers come through. The ones that are coming through are looking for one level, specifically one level. Um,
Which is not common. I gotta tell you, that's my avatar. So I know somebody says I want a one level living with maybe a basement or a townhome with an elevator. Those are not necessarily right available options in volume out there for them. So
yep.
it's interesting that downsizers, you haven't seen a lot more movement. Okay, very well. Well, as usual, Sebastian, thank you very much. This was, I hope, helpful for our viewers, and I will see you on the next one.
I'll see you soon.